Hello everyone. Last week we discussed how Nifty relates to oil price and inflation. Today let's discuss in detail about the current global inflation issue. By understanding this, we can predict the future macroeconomic trends and adjust our investment portfolio accordingly, either by hedging in options or by investing in individual stocks. In general, inflation is caused by two factors, either due to supply disruption driven or demand led one. In the present scenario, it's due to this various global central bank stimulus, and thus at present all the central bank all around the world addressing this issue as demand induced one. But are they correct? Are they doing the right thing? So far, these questions have been unanswered, or at least I don't understand. But recently, I came across this research paper by economist Dr. Shapiro. Basically, he explained a new technique which can quantify which parts of inflation are driven by demand and which are driven by supply. So please listen this video until the end. For sure, you will come to know one new thing, and also it will help you in the way you can make an informed decision. So let's get started. He explained it by using a simple economic logic. See, if there is a supply disruption in a certain industry, let's say for example cars, and the prices are going up because of the supply is disrupted, then the number of available cars will be less, so the number of units sold should go down or remain the same. On the other hand, in the demand-led scenario, people will have more money to spend, so not only the car prices will go up, but also more number of cars will be sold too. By this logic, he dissected whole US and Europe inflation data. First, let's have a look at the US inflation graph. I took it from the Fed website. In the description below, I'll provide all the sources link. If anyone fancy reading all, please have a go. Anyway, here the green color marked is a supply driven inflation contribution, unclear causes as ambiguous in yellow, and demand driven inflation is in blue. What's interesting from this graph is that both supply and demand had major effects, but around the highest point of inflation in 2022, supply side factor issues played a bigger role. So in US, we can say it's 55-45. 55% supply side driven and 45% demand side driven. On the other hand, in Europe, using the same method, about 80% of the producer price inflation comes from supply problems as shown by the blue bars, whereas the demand issues shown in yellow, which don't play as a bigger role, far less important. Overall, in Europe, it's clear it's mainly supply driven, so increasing interest rate will do more harm than it do good. Here, while this information is good to know, it doesn't tell us exactly what's causing these supply and demand issues. Is this Russia's conflict issue or the pandemic, or should we blame the government or the central bank? So to get a different perspective, I found some other studies that break down the causes of inflation more clearly. For example, let's look at this chart from the European Central Bank. Here, the green line on the top of the bars shows the total inflation. The blue part is so-called core inflation, meaning everything except food and energy. Then the orange part shows how much energy prices like diesel, gasoline have been changed. And finally, the red shows changes in food price. From this, we can see that the biggest jumps in prices in Europe were because of food and energy. This suggests that the big price changes were mostly because of Russia conflict and not because of government spending or pandemic related supply chain issues. But okay, the blue bars are also going slightly up as well, which is core inflation. So let's see in another chart that dissects this core inflation. We see that this orange and red parts, which are the areas hit by pandemic related issues and reopening struggles, are the big contributors too. So they are also important factors in the inflation increase. So for Europe, I will argue that the evidence indicates most of the price increase seem to be because of the Russia conflict. It's responsible for around 60% of the inflation. The pandemic comes next, causing about 20%. Everything adds up to the remaining 20%. However, if you see the same graph for US, the reasons behind the price increase are a bit different. Even though the cost of energy and food went up, they aren't the main cause. Unlike Europe, they account for less than half of the total increase in inflation. If you look closely, bit more deeper, in another graph, a big part of the price increase comes from the increase in housing rents, especially in the later part of 2022. This suggests that in US there was a stronger demand-led inflation, possibly because of government financial help compared to Europe. So in conclusion, based on our discussion so far, inflation was largely driven by temporary short-term supply issues which got worse due to the Russia conflict, which caused the problems in both food and energy price. But the difference in how inflation increased in US compared to Europe suggests that US government's financial help had played a big role as well. Now the question is, why inflation is dropping quickly? Is it because of supply chain problems are getting fixed, or because of this central bank rate hike aka tight monetary policy, or Western governments stopped giving the stimulus package? Well, simply put, if you look at the graphs again, we can see the main reason inflation going down is that the earlier supply issues are being sorted out, especially the cost of energy like oil and gas has dropped, which first made things better in US and now in Europe too. However, besides energy and food costs dropping, another reason prices are going down in US is because housing rents, a big part of living expense, are decreasing. You can see this from the smaller green bars on the chart. Here, US Fed has to be careful. They had this temporary reduction in rent. If they kept this higher interest rate for longer period means, then as a consequence, this will discourage people to get housing loan, which in turn will increase the demand for housing rent. In conclusion, inflation is now dropping fast because of the major impacts of pandemic and Russia conflict situation are fading. Now back to our main question. Do all the inflation related issues are finally over? Well, now we know that inflation issue around the world was mostly caused by short-term supply chain disruption issue. Now I think we can make a way more informed predictions about future economic trend. But before, just a disclaimer, predicting the macroeconomic trend is very tough and uncertain. So keep in mind what I said so far and what I'm going to tell next. All are just educated guess based on current information. Okay, first, another big jump in inflation seems unlikely because prices for food and energy have dropped since 2022. Higher interest rates have slowed down the borrowing for homes and business investment. Therefore, expecting inflation to settle around 2 to 3% in the next year itself, or maybe in the middle of 2025, unlike what Fed chairman is predicting. I said 2 to 3%. Unlike 2% target because of potential increase in global manufacturing cost and the government spending on industrial policy and defense, both due to deglobalization and the move towards a multipolar world. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.